And thank you for the opportunity to share a little bit about what we do and what's available in the market for businesses in terms of incentives, how they work, and what businesses need to look out for. That's really what I'm going to go into, is what is available and what do you need to know in order to actually be able to access those funds. All right, so if we can go on to the next slide, please. This is a video, if you're able to play it, Gary, just a little bit.
Hello and welcome to Uzenzele. I'm a co-founder of Uzenzele, a firm that helps businesses access finance for expansion and growth.
Uzenzele is an advisory company in the capital raising space, and what we predominantly do is assist businesses in the growth stage of their business to understand what opportunities are available for them. We like to focus on government incentives, being grant funding, because this really helps in a sustainable manner of capital raising to help in the growth trajectory of the business. Well, what inspired the business idea was our heritage and where we come from. Nadia and I both started in family business, our father's trading business, and we realized quite quickly that the business itself wasn't geared for and wasn't ready to access the funding that was available in the market. When we moved out of that business in 2012, we determined that if that business, which was one of the largest distribution companies in its space at the time, didn't know what was required and didn't have the elements that were required to be ready to access this funding, no doubt this was something that other businesses struggled with as well. And we decided that it would make sense, with everything that we had, all the knowledge we had gained in the business around fundraising and capital raising, to actually establish this consultancy. And that's the heritage of it and where it all comes from.
Our definition of success is really being able to go to the clients after they've accessed the finance and seeing the piece of equipment and the staff and the way the whole business is now able to expand and operate to meet its clients' demand. That's amazing for us.
Okay, so to the next slide. Thanks, Gary. So I just thought I'd share that because it's a lot easier than me trying to explain what I do, and I'd go on for a lot longer. Let's get down to what we're here to talk about today as much as possible. So in terms of cash incentives, and what I'm going to focus on primarily is the cash incentives that are available from the DTIC, the Department of Trade, Industry and Competition now. So they've changed their name very recently. We're going to talk primarily around the first two, and I'm going to give some examples around the first two. We don't have too much time available today to go into a lot of detail, but I've just put up, 6 of the really good incentives that are available from the DTIC. And the reason I'm speaking to these incentives is because they are actually cash incentives. This is money that a business receives as a grant towards building their business. And as Kaz said before I spoke, we need to really build up South Africa and get, start getting the economy going again. And this comes from investment in businesses. Now, government is also there in certain instances to help businesses out. And this is one of the ways by which they are able to do that. So just quickly there, we'll go into the black, if you can go back one more, sorry, again, Gary. So I'll go into the first two in a bit more detail in the slides to come. The Automotive Incentive Investment Scheme is a grant fund that's available for businesses in the automotive industry, businesses that are making components that go into the manufacture of vehicles here in South Africa. So I'm not sure if everyone that's listening is aware, but we've got an automotive master plan in South Africa. We've got various OEMs, BMW, Nissan, Ford, Mercedes, VW. All these OEMs, these motor companies, have factories in South Africa. And so they are then what's known as tier 1 and tier 2 suppliers that are supplying components to them for the manufacture of those vehicles. There are incentives to help those tier 1, tier 2 companies and OEMs actually get machinery on the ground so that they can create the jobs, and that has significant impact on the economy. The film incentive is there for exactly that. It's to assist businesses put movies and TV programs together. Capital Projects Feasibility Program is a very interesting fund that helps businesses in the cost of bankable feasibility studies that are required to set up projects outside of South Africa. There's some funding in it for projects in South Africa, but what government is saying here. And of course, we need to see what's going to happen with some of these funds post-COVID. But I think that a lot of them will still be there. Certainly the first two, I imagine, are going to very much still keep going. But ultimately, at the end of the day, all of these looking to actually boost the South African economy. That's the purpose of these incentives. Create jobs, boost the economy, right? And then the critical infrastructure program, which speaks to building infrastructure, typically primarily linked to some sort of industry as well. So infrastructure that's required for an industry to actually function. Thanks, Gary. Next slide. So the Black Industrialist Scheme, very quickly. This is a fund that we really enjoy facilitating. We do quite a bit of this fund. We've got several clients we've successfully raised funding for, and I'll go through a little bit of an example of one of our clients. But just the high level information of this fund. It's available to businesses that are majority Black owned. So Black Industrialist Fund, companies that are majority Black owned, and it is to create industrialists. So big business is the idea here. What that means is that a minimum 30 million Rand capital expenditure requirement is there in order to be eligible for this fund. So two very big eligibility criteria is that majority Black ownership and a 30 million Rand CapEx requirement. If you meet those two, there are other elements that you need to be scored on. There's a scoring sheet, but ultimately what it comes down to is you will be awarded somewhere between 30% and 50% of a grant towards your capital expenditure. And I'll run a little bit into an example of how all of that works in a moment. All right. Qualifying companies are any type of manufacturing. As long as you're Black, majority Black owned, so 51% plus, and you're in manufacturing, this is an option. All right, it's for companies that are either starting up or expanding. So if you're looking to set up in industry, this is an option. Or if you're looking to either expand your lines, improve your machinery, if you've got old outdated machinery, you need to upgrade, this is a fund that's an option. I mentioned the 30 million Rand CapEx requirements, a level 4 BE. So this might confuse some people. You go, well, you're majority Black owned, aren't you automatically maybe a level 1 or level 2? That's not necessarily the case. You've got businesses that are generic, so turning over more than your 50 million Rand, that are 100% Black owned. If they're doing nothing else on the scorecard, they're not going to reach a level 4. So this BE score is important. You know, it's for businesses to not just have that ownership element, but also look at skills development, supplier development, all those other wonderful elements of the BE scorecard. And then what is excluded from the grant? And this is also extremely important. And I'll break it down again in the example that I give a little bit later. Working capital is not included in the grant. So the grant will not contribute to working capital, only CapEx. It won't contribute to land. It's not for low value manufacturing. So the DTI has actually put out an interpretation note to say, you know, things like water bottling and ice cream manufacturing are very low value addition. So they've said, you know, that won't qualify. There's not enough happening in terms of bringing your raw material into something new and something different. And then it's not there for purchase of shares. And this is extremely important. There's been a lot of confusion. A lot of businesses call us and say, I want to access this grant because I want to buy a manufacturing company. And we've been saying this over the years, that's not what the fund is there for. And finally, earlier this year, the DTIC put out an interpretation note clarifying that it is not there to purchase funds, shares, sorry. Thanks, Gary. So Agroprocessing Support Scheme. This is for agro-processing. And what's important is, you can just go back one. What is important is that understanding of what agro-processing actually is. If we can go back just one slide, please.
Sorry, Zahra, I'm going to do that now.
All right, great. So I'm just going to keep going while that slide comes up. So agro-processing isn't primary agriculture. It is value addition to agriculture. And this is important to understand when it comes to government incentives. There's a big focus on facilitating and assisting businesses that are in manufacturing. All right. So agro-processing is that manufacturing aspect related to the agro industry. So you've harvested your crop, that's not agro-processing. You've put it into big barrels, that's not agro-processing. Let's say you've harvested apples. Now those apples get put on into a factory, cut up and made into frozen mini apple pies, or bagged as sliced apples that goes into, I don't know, Woolies or something like that. That is agro-processing, a significant value addition in the process, so that now you can actually, you're actually working on the product. On the agro-processing support scheme, also a cash grant, what's required here is a level 4 BEE compliance. So Black ownership is not a requirement. It'll help you score higher on your points, so get you closer to your 30%, but you don't need Black ownership. You need a level 4 BEE or better to qualify. Where transformation plays a role here is rather in one of the targets that I've stated in the white block, which is 30% procurement from local Black-owned businesses. So what this fund is saying is, we understand that not every business has that Black ownership. We're happy that white-owned businesses, as long as you're achieving a level 4, which means you're doing what needs to be done in terms of skills and preferential procurement, etc., is there, and you procure 50% locally and 30%, not 30 of the 50%, but 30% of your raw material inputs need to come from transformed suppliers. This can sometimes be a bit tricky. We see that this grant doesn't necessarily get dispersed as much as we'd like, and the reason is that the primary agriculture in South Africa is not sufficiently transformed. So meeting that 30% demand is a bit tough, but we are lobbying and we are speaking with the DTIC to see if they can change that requirement, and how can we work around that, because it is preventing businesses from being able to access this grant. And this grant is up to 20 million rand. So the Black Industrialist scheme is up to 50 million rand. The Agro-Processing Support Scheme is up to 20 million rand. And this is a cost sharing of 20 to 30%, again, for your CapEx. And we'll run through what CapEx is as well. CapEx is primarily the things you can touch and feel. So your tools, machinery, equipment, some commercial vehicles, and building. So like I said, not land, but building. So building improvements, putting up a site, buying a factory, the building itself, those sorts of things contribute to your capital expenditure. Things like salaries, raw material, stock, all of those things are working capital. That is not included in what the grant will contribute towards. All right. So I just wanted to quickly touch a little bit on leveraging ESD. I think this is extremely important, and both for corporates and for SMEs. What's the benefit of ESD, and how can ESD and grant funding be brought together? Because there's so much opportunity that I believe is going untapped, right? Essentially, it's an opportunity. So ESD is there to assist to assist enterprises and your suppliers, smaller businesses, EMEs and QSEs, to build their business, right? And a lot of the time this comes in the form of either, soft loans, grants, and businesses have a certain amount of money they have to allocate towards ESD. Now, how can that be leveraged? And this is what I'd like to see happen more and more as we go down this road, is where funding that is available from measured entities goes towards actually supporting SMEs in accessing these grants. Because if you remember, I spoke about let's look at the Black Industrialist scheme. I spoke about 30 to 50% cost contribution. So if we go to the next slide, Gary, how does a grant actually work, right? So what we look at is, let's break it down bit by bit. The previous slide, please, Gary. Wonderful, thank you. You start by calculating your project size, right? So you've got your CapEx, and let's assume your CapEx is 35 million rand. Let's say this is an example for the Black Industrialist scheme. So your CapEx is 35 million rand, you qualify, you've got your Black ownership as an example. And your OpEx, your working capital, salaries, all your overheads, day-to-day running costs, et cetera, is going to be approximately 20 million rand. So your total project size, 55 million rand, okay? From your project size, like we said, we've got 35 million rand, and I've broken that down a little bit. Machinery, let's say, is 25 million rand. 5 million rand is for your building, and for your vehicles, it's another 5 million rand. That's how you get to your 35 million rand. So now let's look at that CapEx as a whole and how the grant actually works. You get, let's say you've only got 51% and you don't score full points. So you get the 30% mark as a grant contribution towards your CapEx. What that means is you would get approximately 10.5 million Rand as a cash grant. So you still need, what's the balance between 10.5 and 55 million? 44.5 million Rand. You still need 44.5 million Rand to implement your project, right? So, which is the 70% of your CapEx that hasn't been funded by a grant, plus your 20 million Rand operating expenditure, working capital, 44.5 million Rand. So if what we can do is, and typically that money comes through debt. So you'd go to a commercial bank or a developmental bank, the likes of the IDC or NEF, DBSA, etc., and you'd look to those institutions for that, that matched funding. But if we could get the corporates in South Africa to actually say, I've got, for example, I've got 50 million Rand that I need to spend in ESD. Which of my suppliers do I see can be built? They're small at the moment, but if they get better machinery, they can employ more people, they can provide us better product on, you know, at a better spec, at a better price, maybe more regularly. Which are the suppliers we want to see grow? Help those businesses and actually contribute towards that matched funding. What that will do is it'll more easily unlock funding from the lending institutions. So the banks, the commercial banks, the developmental banks, etc. So the beauty about this is that there's an opportunity for both corporates and SMEs to benefit by working and getting those points. And you know, corporates would then get extra points because they're providing loans or grants if they could, if they're open to doing that. Okay, so if we just look at how flow of funds works, and this is extremely important with incentives. A lot of businesses get this wrong. If we can go to the next slide. A lot of businesses get this wrong as well. When do you get funds that have been approved from a financial institution, like the DTI? When do you spend? When can you spend? What can you claim back? One very important thing. Any money you spend before you get an approval, there are one or two exceptions. The automotive investment scheme is one of those exceptions, but majority of the funds, anything you spend prior to getting an approval from the DTIC, you will not be reimbursed for. So wait for that approval. These incentives are it's strategic funding. It's not funding you look to raise because you need money tomorrow. It's money you look to raise because you've got a long-term view. And post-COVID, that's what we need to do. And I think I'd just like to share that what I've seen over the past few weeks is very, very, very positive, in that there are a lot of businesses I've been speaking to that are saying, you know, yes, COVID is a reality, but we still see that we've got business. Business hasn't necessarily stopped. It might have slowed down a little bit, or business is continuing. And we foresee growth. We want to look at how do we access these funds so that over the next year to 2 years, we can build these factories. We can make sure that we're creating jobs. We can you know, build these businesses because the opportunities are still there. And it is on SMEs in South Africa to do this to a great degree. So how does the funds work? And the importance of the matched funding is what comes into play here. What you do is you first draw from your matched funding. Right? So you draw down from your debt or equity first, and that's based on your project plan and your milestones. You'll draw from there and you'll start to spend. You'll pay for your CapEx. You'll put a deposit on your machine. You'll pay the contractor or you know, to start laying the foundation on your factory, as an example. What you then do is you take those invoices, the proof of payments, the bank statements, fill out the claim forms, etc., and submit all of that to the DTI. The DTI will do an inspection, will make sure you actually paid the money, and upon verification of all of that, they will reimburse you that, for example, 30%. So you need to spend from your matched funding first, from your loan first. So grants will not be paid out unless you've got your matched funding, that debt and equity that you need to make up the full project size, in place. All right, the grant then pays out, and that goes back into the cycle. A lot of businesses say, how am I supposed to invest in my project if I haven't received the funds from the grant. No project of these sorts of values and nature require you to put all your money down on day one. It's a process, it's a cycle. So you spend a bit, you claim, that money comes in, and you continue on that cycle. You draw down from your loan again, you allocate some of the funds that were paid out from the grant, and the cycle goes, the cycle goes, the cycle goes, until you finally put together your entire project, and you do your last claim from the DTI, and that's typically 2 to 3 years later. So it's a long process. I don't want businesses to think that you're going to apply tomorrow and get this funding. It is tricky, it is tough, but it is something that is doable. And I'll give you an example of one or two of our clients and what we've done and what they're doing, so that you can get an understanding of what is available.
Excuse me, Zahra. I just wanted to check with you. So as part of what Uzenzele Holdings does, is that do you assist even with regards to managing this process as part of your service offering?
We have that as part of our service offering if necessary, and if you require, that comes down to project management, because after the funds have been raised, now you have to implement your project. And that would be considered, your project management of setting up your site. And we do assist with that if businesses require.
Great.
All right. So if you can go to the next slide, please, Gary. Okay, so here's the important thing about raising any funding. And this it doesn't matter what it is you're looking to raise that funding for. You need to show the viability, the sustainability, and the bankability. Now, I'm speaking here not about NGOs and that sort of thing, though they also need to show sustainability and viability. I'm speaking of for-profit businesses, revenue-generating businesses, yeah? So we're looking at raising these funds. What do your financiers want to see? And this is both the DTI who's giving you the grant, as well as, and more so, not as well, but more so, the institutions that are providing that debt finance. You need to show financial viability. So your financial model needs to be detailed. You have to consider all aspects. It can't just be this high level, sort of wishy-washy, put together on what you believe this project can be. Every single business in the world is successful on Excel. The idea is to actually apply legitimate, real scenarios and real opportunity in your models, so that the financiers can look at that and go, yes, okay, for this business, this is possible. All right. Proof of market. This is a big aspect of what goes into that financial model. A lot of businesses say, let's say, for example, I want to, I'm going to use COVID as an example right now. So there are businesses that, and if anyone has had any experience with what's happening with PPE in the market at the moment, it's chaos. There is so much demand for PPE right now. But just because there's demand doesn't mean people are buying from everyone that has PPE. So masks is a great example. There are businesses that are saying now, okay, I want to set up a factory because masks, there's a huge demand. And these ventilator masks are being sold at 50 Rand a mask. To which the answer is, okay, but your factory is probably only going to be up in 18 months. The price of masks are going to level down again and stabilize again. The mask you're paying for 50 Rand today, prior to COVID, you were paying 6 Rand for, 5 Rand for, and that price it's going to come back. Over and above that, is that demand still going to be there in the future? So what financiers want to see is that you've engaged with your market. You've got your letters of intent or contracts or off-takes. It's extremely, extremely important. Next is your team. Does your team know how to run this business? What experience do you have? What skills do you have to prove that you're going to be able to actually successfully run this business? And if you don't have those skills, where are you getting them from? Okay, and you will often hear financiers speak about who is the jockey, who is running the business. So while the person running the business doesn't have to have all the skills of how to run the machinery and how to do the finances and how to market and how to sell, they need to know how to run the business. Who are they? Do they have the passion for it? Do they have the knowledge for it? And then who are they bringing in to support them to ensure that this business is going to be successful? And then lastly, compliance. And this is pretty standard. Every business should have this, big or small. No matter how small you are, please, every business, I implore you, spend a little bit of money, put together a good financial management system. Things like Sage and Zero and, you know, all these tools, they're relatively cheap, like a few $100 a month. Use them. Make sure that you track all of your company financials properly, your expenses, your income, invoice things, pay SARS, make sure you're tax compliant, have your BEE up to date. All of these compliance matters are going to be extremely important. If they are not in order, you are not getting funding from government or anyone else. And then before we go into how we work, I'll just break that down in a few minutes. I want to give you an example of how bankability and the flow of funds and etc. has worked for a few of our clients. So I think I'm low on time. I'm going to just do one example. We recently did a Black industrialist application for a 100% Black owned family business. They were in construction, and they saw the opportunity to manufacture some construction material. They'd never done the manufacture of construction material before. They are in construction itself. They decided that they wanted to manufacture this construction material. They spent quite a bit of time deciding on who the right supplier of their machinery would be, etc., etc. When we engaged with them, we started to unpack their project and look at the bankability aspects. Their team needed to be beefed up a little bit on someone that actually had experience in running these sorts of plants. So they brought someone on board. They found someone with years of knowledge, and they said, we're putting this up. As soon as we put this up, will you come on board? Will you essentially be sort of an operations manager for us? Great. So they've got their team beefed up, and they've been in business for years, so they know how to run business in general. Good business people, good jockeys. Proof of market was the most important thing. Why? Because the fact that there are people building and that are requiring this construction material is one thing. Are the buyers of these construction materials going to buy from you? So they went and they really engaged with the market, with various companies that buy bulk construction material, like your hardware stores, etc. And they got letters of intent. And those letters of intent were non-committal, but were rather specific. So they said, you know, if you can manufacture this item, we will buy 10 tons, as an example, 10 tons a month from you for the foreseeable future. We need this. So they got that, and we were able to build their financial model and the business viability on the back of that proof of market. Because now when they say, we've got 5 different off-takers, they've all given us letters of intent, and all together they are going to procure 100 tons a month. It's real, it's in writing, it's not assumed. And this is extremely, extremely important. So what we did was we put all of that together, we built the financial models, we put together a bankable plan for them. We went and submitted to both the DTIC and the IDC. Their machinery, their CapEx cost was almost 100 million Rand, so quite a big project. We got them just shy of 50 million Rand as a grant. They got 30 million Rand from the IDC at very, very low interest rates at basically 4% flat fee over the period of the loan, with the payment moratorium, giving them time to set up their plant before they need to start paying back. And then, you know, another plus minus 30 million Rand at prime plus 1.6 to 2%. So that's the sort of funding that's available in the market. But the elements of bankability that you are seeing here right now, these are absolutely paramount, supremely, supremely important. Without them, financiers really aren't going to be confident. And you run the risk of going and trying to raise money for a project that is very possibly not sustainable. If you can go to the next slide, Gary. So just in terms of Uzenzele's process, what we do is we start with an eligibility analysis. So this is how we help businesses through the whole process. We do an eligibility analysis in terms of understanding the type of funding you're looking for. If we determine that we're able to assist you in accessing funds, we'll then go to a bankable plan. We'll draft that for you. So we get really involved. We get our hands dirty with the business owners. We help draft the financial models. We help put together the business plan, all in very, very close consultation. We work hand in hand with our clients. We don't draft something for them that they have had no involvement in. You need to ultimately understand your plan, explain your plan, and implement your plan. If I just draft something for the sake of it, so it looks nice, That's not really going to help you. We put together a plan that you can implement. We then apply and facilitate that process. So we engage with the financiers on your behalf. We call them, we say, where are you? We haven't heard from you. That, you know, they'll come back and they'll ask for documents. We make sure they get those documents. So we really facilitate and allow the business owner to run their business while we take care of the financiers. And then lastly, we assist with all the claims that are required and drawdown requests for funds on approved funds that have been allocated. And yeah, so that's essentially what we do as Uzenzele. By all means, I mean, ultimately at the end of the day, any business is able to access these funds. My recommendation, if you're looking to access funds, if you're looking to do this on your own, great. You need to know how to put together financial models. You need to know how to put together a good business plan. So get someone to help you with that and read the guidelines. So many businesses apply for funds that they simply will not be approved for because they don't meet the eligibility criteria. Read the guidelines, spend some time digesting them, understanding them, and going down that road. If you want someone to assist you, Uzenzele, we're here to do that. Reach out to us. I think the next page is just our contact details. Reach out to us. We're more than happy to assist businesses. We primarily facilitate funding of 5 million Rand and up. So anything less than that is not something we typically will look at. But we will always guide businesses in the right direction if we're able to. So if you approach us, if we're not able to assist you for whatever reason, we do our best to link you up with someone that can.